Welcome everyone. Today's video we will be covering three pairs in our market movers watch list. We have Euro NZD, USD CHF, and AUD USD. First things first, let's talk about Euro NZD. We had a sell limit initiated the other day with a bias of a sell, looking to short, taking price all the way down to somewhat around the 1.99035 level. There actually was some economic news around 8 p.m. Asia session that negatively impacted the NZD, causing Euro NZD price to rally to the upside, as you can see, dramatically all within the hour candle. In conclusion, this took us out of the trade, leaving us down 1%. Let me zoom into the 15-minute. As you can see, this candle happened all relatively within a short period of time. If we zoom into the 5-minute, it actually happened all within that 5 minutes. So again, to traders, it's always important to make sure you pay attention to the economic calendar. I use a Forex calendar. It's called Forex Factory. I go on here and I can look to see of any relevant news. High impact news is typically red. And as you can see at 8 p.m. yesterday, which has passed, they faded out now. NZD, there was an official cash rate of a negative 2.5%. Was the actual, and the forecast was a 2.75. So it negatively impacted that trade. I did not take the time to actually look at this news, so that's my own fault there. But that's the trading game. It comes with the territory. So I used proper risk management. I was out of the trade, 1%, and we move on. So unfortunately, this week so far we're 0 for 2. But it's not about how you start, it's how you finish. So moving on to USD CHF. I actually took this trade yesterday at around just shortly after the previous upload. And this was a short-term long position. I actually was doing analysis more on the hour and 15-minute. This is more of a, I would say more of a day trade more than more of a swing trade. So I can break down the trade and show you what I saw. So let me start on the daily chart. I did see price was below this 50 EMA. Price was trending downward as far as in this region over here. We later then decided to create the verge of struggling to create a new market structure shift. So as you can tell over here, price was actually trending and making lower lows and lower highs all within this region on the daily chart. And then price came up to make this lower high, came to make a lower low, made a lower high, failed to make a lower low, and then price actually broke in this region right here to then make a higher high, which then gave me a bias to begin to look for some longs. I also saw a very vague version of a triangle pattern. So typically when price gets close to the end of the triangle, price tends to squeeze and it has to push in one or the other direction, upside or downside. So in this conclusion, my bias was a long position. Moving down to the 4-hour, still maintaining, looking at that market structure pertaining to the daily chart. I actually didn't really see much more. I just refined my trend lines, made sure they were touching tip of the wicks, crossing through as many wicks as possible. We have it here, 1, 2, 3. I can do this even for you too for some more clarity. We have wick here, wick here. We have wick here. We also have this very aggressive, looks like almost like a stop hunt wick here. And then I actually ended up moving down to the 1 hour, as the 1 hour and 15-minute was more of my main time frame for capturing this trade. So I actually drew my trend line from this tip of this wick to this wick and moving it to the future. And I actually had to jump down to the 15 minute to actually see where price was on my trend line. It tapped multiple times, almost more than four times. One, two, three, four, five, six. And then I actually jumped back up to the hour chart. I saw this triangle pattern. I saw that price was respecting this key level. There's two very strong resistance points where price came started from this 0.795, came all the way up to almost the 79944. Did the same thing. Price came down dramatically, came back up, respected it, came back down aggressively, respected it. So for me, this was a very strong point of interest as well. So I wanted to be very careful of this area. And then I actually took my fibs. Let me delete some things here. I took my fibs. I took it from this swing low to this swing high, and it brought us to the 61.8, which is the golden zone, a very strong respected area on the Fibonacci level. And I also actually began to jump down to the 15 minute. I did our famous fib trick, and I took this swing high, took it to this swing low, and we have price coming down and respecting that minus 27 and minus 61.8 level, which is completing the move within the move. So let me delete that fib for some more clarity there. And then I actually ended up zooming in. I actually looked at market structure, looking for variation of a pattern. I did see a variation of a double bottom in this region. Basically, price tapped here and price tapped here. And let me draw it out for you. So price came from this level, came down the swing, came back up, came down for a second time, creating a double bottom, and rallied up to the upside. So for me, before this even happened, that was my bias. Double bottoms, typically the second swing low will tend to reject. If you have some form of confluence, we have the move within the move, and we have the trend line. So that was another confluence of why I decided to take the trade. And for this trade, I actually ended up I had to go down to the believe the 5 minute just to get a good entry. We did see that price was maintaining above the 50 EMA and the 15-minute chart, more of an intraday type of look. And then on the hour chart, we did see that price was maintaining above this 50 EMA on the hour chart. So again, looking for longs. We ended up going down to the 5 minute, and we actually entered somewhere in this price action. We saw a bearish engulfing candle. We saw price tend to respect this trend line, making a double bottom. We have a bullish engulfing candle right here, and we entered off this variation and entered. So going back up to the 15 minute, we actually had to see where we were in the Fibonacci. As we stated, we're at the 61.8. As far as stop loss rules, what am I going to say? Stop loss just outside the next level of the Fibonacci level, or just outside maybe a potential fair value gap, an order block, or just outside the fib trick completed zone. So for this instance, we have just outside the 78.6, which is one level below the 61.8. We are just outside of the fib trick zone, and we are just outside of this other trend line, which is not really the greatest, but I'll say we have two, not three different confirmations of a strong, confident stop loss. The trade, as far as take profit, we were targeting based off the 15-minute chart, and we saw this swing high. It's only a 1 to 2. We wanted more considering we were down 2% for the week. We need to recover. Like I said, this is not revenge trading. This is not over trading. This is just being tactful, strategic trading methodologies. So I saw the minus 27. I didn't see any really core resistance besides this 79936 level, but it was really close to the previous high. We were going to target the full 61.8 based off the hour chart, because this is the fib off the hour chart. And we saw pretty much a clear shot. No indications. We did see a previous high here. There could be some type of resistance somewhere of this realm. And as you can tell, considering the trade has already been fully executed, we did see price come up, hit our target 61.8, respected, and coming back down. Price might come back down and might come back and retest this trend line. If we could see a fib trick within here and we're at a 61.8 or so, we may take another trade in now that we're out of the trade to capitalize on the trend. So for this so far, this trade was a 1 to 4.5. I actually let the entire trade run. So with the plus 4.5, give or take, spreads and commissions, and the 2% loss from the other day, we're about 2.5% up for the week so far. So we are also going to move on to the other trade, which is the AUD USD, and this trade has not been executed. This trade was a forecast analysis. There was a market, we call it a market mover. There was a breakdown opportunity that was missed, and you can see where these arrows are in this highlighted eclipse, that this would have been a great opportunity to take price down. And I just highlighted this region for everyone to see like what could have been if I were to take the trade. And you're not always going to catch every single move, and it's okay. So based on this analysis, I can delete this now so you know, because this would have been like almost a 1 to 7. Would have been really great. But considering the bias in the top-down analysis and the breakdown of everything, I was going to take price to this dotted line. I was forecasting price to come down and respect this trend line and line within this fib trick completed zone, which gives me more confirmation of a strong buy confirmation. So in this instance, price didn't necessarily come to exactly where I wanted on as far as respecting the trend line, being within inside the fib trick. And let's see what the Fibonacci zone would have been as far as a respectable level. Let's do it from this swing low to this swing high. It would have put us just above this, between the 70.6 and 61.8. So it is really at a really nice Fibonacci level, but we're not going to necessarily take the trade because we need more confluence. We need more confluence in order to take the trade. So beyond that, those are my market movers so far for the week. As I stated before, 2 losses so far, 1 win. The 1 win outweighed the 2 losses, 1% each, 2% down, and we are at roughly 2.5% up for the week. So if you're liking these videos and if you want to know more about the Forex calendar and Forex Factory, please leave a comment. I'll be more than happy to make a video. Like I said before, if you're liking these videos, please give a thumbs up and subscribe. It really helps the algorithm as we grow this channel. Thank you. Bye-bye.